Hello, welcome back. Time now for business news, and for that, I'm joined on set by Catherine Nicholson. Hello there, Catherine.
Hey, morning, Louise.
So, it's all about the fiscal cliff and whether the US will go over it this morning.
That's pretty much it. We've been talking about this for such a long time, haven't we? And normally American politicians wouldn't be working on New Year's Eve, but they are joining us in solidarity, working on December 31st for the first time in several decades, actually, because they have to make some decisions by this deadline. Now, investors have not been reacting very well to the fact that they've failed to make a decision about the tax rises and spending cuts that they need to make. We're going to hear a little bit more about that later on. But first, Catherine Viet's going to talk us through the fiscal cliff, what should be decided today, and some of the consequences if no decision is made.
As U.S. politicians engaged in a game of brinkmanship, the president remained hopeful that a deal could still be struck.
Democrats and Republicans both say they don't want taxes to go up on middle-class families. That's something we all agree on. If we can get that done, that takes a big bite out of the fiscal cliff. It avoids the worst outcomes.
The squabbling is over how to avert the so-called fiscal cliff, a series of spending cuts and tax hikes that are due to start on January 1st.
My big worry is a contraction of the economy, the loss of jobs, which could be well over 2 million in addition to the people already on unemployment. I think contraction of the economy really would be just terrible for this nation.
If no deal is reached by midnight on December 31st, more than $500 billion in tax increases will begin to take effect, along with $110 billion in spending cuts. These include reductions in the defense budget, the end of a 2% payroll tax cut, the end of long-term federal unemployment benefits, which immediately affects 2 million people, inheritance taxes to rise from 35% to 55% on properties worth more than $1 million. While the cuts may not spell immediate disaster, many economists worry the mandatory measures could send the U.S. back into a recession.
If the fiscal cliff hits in all of its fury, if there is no compromise whatsoever, I do think you'll see a contraction here in the equity markets and a lot of the commodity markets as well.
The uncertainty is also causing jitters in the markets as some currency investors move away from the dollar.
Okay, so talks restart at 5 p.m. Paris time. What if an agreement can't be reached?
Well, President Obama is promising that he's going to try and push through a vote on a fallback plan, which will be at least a bit of a sticking plaster before they reach a full decision. Now, he wants, with that, to preserve tax rates for the poorest Americans, people with incomes of up to $250,000 a year for a married couple or a family. He would also extend unemployment insurance for 2 million Americans for a period of time. So that at least would keep America going for a while. But Republicans are opposing these kinds of measures in the long term. They want that low-level tax rate extended for families of incomes of up to double that amount, $500,000 a year. So there's still plenty of scope for deadlock.
Okay, much has been said that there could be financial Armageddon if we do go over this fiscal cliff, but what really could be the economic consequences?
Well, in basic terms, if people have taxes go up and they lose some of their benefits, then they will have less money in their pockets. They will then spend less money. That means there's less revenue for shops and businesses, less demand for manufacturers' products, cars, all sorts of things that are produced in America, and this would impact on production, and people are predicting a return to higher unemployment levels of perhaps more than 9%. And of course, the unemployment level has been slowly but steadily coming down. In fact, some economists, one from JP Morgan, predicting that up to $550 billion could be sucked out of the American economy. So we're talking big money, and yes, a return to recession, and quite soon.
Okay, well, how have investors been reacting?
Well, currency investors in particular have been moving away from the dollar. We've seen the euro and the yen both getting stronger against the dollar. The Australian dollar is being seen as a particular safe haven, and the Australian dollar could have much to gain from a continued deadlock. We can hear from one Asian investor who tells us that he thinks this deadlock is set to continue in some form or another.
So I think what is most likely to happen is that the two sides will come up with some stopgap temporary measure, which means in 1 month time they will fight over again. So it is this paralysis that is really poisoning the atmosphere and making the American government simply dysfunctional.
Okay, well, let's get some more detail on market reaction, Katz.
Okay, so looking at the end of last week, the US stocks closed down pretty much across the board on Friday. No deal, as we know, in Washington. So we can see there how they closed. Of course, we'll see a bit later on today if investors continue with that. In Asia, the fiscal cliff has definitely been weighing on Asian trade. We can see there is a bit of a mixed picture, but that's been very up and down throughout this morning. Mainland Chinese shares have been gaining off the back of positive manufacturing data there, so it's not just the fiscal cliff that people are thinking about. We have to remember, we can see the Nikkei there is closed today. There are quite a few markets around the world closed for all or part of the day for a New Year's or end of year holiday. Includes Tokyo, Milan, Frankfurt and Sao Paulo, so less trade going on today.
Okay, brilliant. Well, back here in Europe, German Chancellor Angela Merkel has a less than happy New Year's message.
Yeah, we're all obsessed with the fiscal cliff at the moment, but it doesn't mean the Eurozone crisis has gone away by any
sadly.
means. There's a pre-recorded TV message that Angela Merkel is putting out on German TV later on Monday, and in it she says the Eurozone crisis is far from over. She's telling Germans that measures to heal the roots of the problem are starting to work. We know she's a very cautious lady. She doesn't like to get ahead of herself, but she's saying they should expect a tougher economic climate, not an easier one. Now, what's interesting is this actually goes directly against what her own finance minister is saying. Wolfgang Schäuble told the Bild newspaper, oh yes, things are starting to get better, the worst of the crisis is over. So a bit worrying for Germans that there's such a split between the Chancellor and the finance minister. But they'll be hoping that Schäuble is right, I think.
Okay, well, we'll have to wait and see what 2013 has in store. Now, in terms of South America, two big Spanish-owned energy suppliers have been nationalised by the Bolivian president. Why has he made such a drastic move?
Yeah, it's a big, drastic move. These are two companies that are owned by Spain's Iberdrola, and Evo Morales says that they were overcharging plenty of Bolivian customers. In fact, pretty much everyone who lives in a rural area was paying 3 times as much more for their electricity than people in towns and cities. He's saying this is unfair, goes against the constitution. He's signed a decree bringing them under state control. Iberdrola has reacted actually quite calmly. They're saying, well, we just hope that we're going to get a fair price from the Bolivian government, and the Bolivian government saying, yes, we'd like to deal with this amicably. But it is quite a big move, and this follows a bit of a track record for the Bolivians. They've nationalised energy, oil companies in the telecoms sector, and we've seen similar moves in Argentina as well.
Okay, just quickly, Kat. Egypt's money reserves have fallen drastically during recent unrest, but there's some uplifting news there now.
Yes, talks with the IMF about a new loan, which Egypt desperately needs, are going to restart. According to the Prime Minister, the central bank says its reserves are down to around $15 billion, and that was at the end of November. Talks with the IMF were put on hold during all the recent unrest, the protests that we saw around the referendum about the constitution, but hopefully that should be getting back on track for Egypt. They'll be looking for around $4.8 billion, which they do quite badly need.
You certainly do. Thank you very much, Kat. Catherine Nicholson there with our business news. Stay tuned to France 24.
What to do with Switzerland's new lakes? Melting glaciers are opening new doors in this changing alpine landscape. An irreplaceable loss for the environment, but an unexpected win for the economy. Join us for this week's special edition of Environment.
Don't miss Environment. Today, 10:15 a.m. Paris time, on France 24.